We had Black Monday for markets, especially Bitcoin and crypto. Then I guess we had bounce back Tuesday, and we have sideways and wait and see Wednesday. But it was interesting to see what bounced, how hard it bounced, and what was leading the charge back. I was a bit surprised, honestly, that it was the thing we never talk about here, which is meme coins. But Bitcoin's still down big over the last week. I think people holding their breath, waiting to see what comes next. But when I want to zoom out a bit, not just talk about price action, but talk about what's actually happening and being built in this market, I invite Haseeb. Luckily, we got him on the East Coast for once. So he's here to chat with us at 9 a.m. Eastern Standard Time. Of course, we got Texas West Capital on the back end. Guys, I couldn't be more excited for this show. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started, please subscribe to the channel, hit that like button. I don't want to waste any time, going to dive right into it now. Good morning, sir. How are you today?
Hey, how's it going, Scott? I'll say you leveled up your intros since the last time I was on here.
Really? I did better?
Yeah, it's good.
Practice.
It's hitting. Nice.
They think we're at like 2,000, 3,000 shows by now. If I can't manage to spit a few words, you know. I think we figured out that on long form recorded podcasts, we're at like 450 now, and that doesn't even include daily shows. So it's been a while. And you were in there early.
10,000 hours. I was. Yeah, that's right.
So listen, man, we've had this kind of wild few weeks here. Obviously, a big pump sort of into the conference, Trump announcing a potential strategic reserve, and then this hangover and sort of then macro providing a lot of headwinds at the same time as that hangover and a big dip. But you wrote a great tweet from one of your LPs yesterday and how you're responding. And you kind of hinted at this for Bitcoin. Interest rates, geopolitical instability, retail having more discretionary income, stimulus, and regulatory wins. So you're still seeing a lot of potential tailwinds, I would imagine, here for crypto and Bitcoin specifically.
Yeah, I think it's important for people to internalize what exactly was the catalyst here, because I think crypto is often the tail, and sometimes we're the tail wagging the dog, and people can get the sense that like, oh my God, we have so much agency in how all of this turns out, and if we just believe hard enough, and if we just really buy the coins and hold them, then everything's going to be okay. And the reality now is that crypto, part of what it means to get institutional mainstream adoption is that they now own you the way that they own everything. And so when everything starts moving, you move too, regardless of whether whether what's happening in the world has anything at all to do with crypto. And so very obviously, the rates on the Bank of Japan have nothing to do with how good of digital gold Bitcoin is, or how good Ethereum is, or how good Solana is, or how funny your dog coin meme is. But all of these things were naturally affected by just this massive draining of liquidity outside the system, because of what happened with the Bank of Japan. So I was explaining this to somebody yesterday who's like not a finance person. And I guess a lot of your audience is traders, but most of the people who I talk to are founders and kind of entrepreneur types. So the best way I can explain what really happened, because the funny thing is that the Bank of Japan situation is so crypto. It's like such an obvious crypto kind of thing that would happen, Yes. So basically what happened was that the Bank of Japan, like while everybody else is raising their interest rates because they're like, wow, it's just such a different environment today, we should not have our interest rates this low. And the Bank of Japan was like, well, actually, I think my economy still is kind of understimulated, and I actually think that we need really low interest rates. So the Bank of Japan was offering 0 interest rates, while everybody else in the world was jacking up their interest rates to 20-year highs. And so basically what that means, if you just imagine that, right? Imagine you're in DeFi and there's one lending market that it's, let's say it's MakerDAO. Okay. MakerDAO is offering free money, 0% interest. You do not have to pay anything to borrow money from me. I will just give you money. If you have an idea, here's money. Just go do it. And everybody else is like, well, I will just pay you to give me money. Yeah, that's great. And so everybody was like, well, awesome. I will just borrow money from MakerDAO, and then I will give it to everything else in the world, which, anything will make money off of that spread. And then the Bank of Japan finally, unexpectedly, was like, actually, you know what, guys, we're going to start raising interest rates. I think this has gone on long enough. And everybody was stuck in this trade of borrowing from the Bank of Japan, MakerDAO, and making money off of these, basically yield arbitrages. And they were forced to unwind that gigantic trade, which led to tons and tons of people getting margin called or having to go and make up the difference. And now, because the Bank of Japan thing is denominating yen, imagine if all the loans from MakerDAO were denominated in some magic currency. Well, all of that currency had basically got bid up in people trying to go pay back their loans all at the same time. And that's what caused this huge crunch in just kind of capital supply chains, if you can imagine it that way. So that's slowly unwinding now, but it unwinded really viciously on Monday. And that's basically what blew everything up. And a lot of that, turns out, was part of the capital sources going into crypto.
And into everything. I love that you said it's the most crypto thing ever, because for anyone who wasn't watching last cycle, this is highly reminiscent of the GBTC trade, which ended up sort of being the widowmaker for our entire industry. Very similar. People would effectively buy GBTC at this huge premium, right? Or it was offering a huge premium at the time. And then they would go take that money, buy some underlying Bitcoin, some other things. And then in 6 months, when they could unlock, they would get this huge, basically, benefit of having bought Bitcoin at a huge discount via GBTC. But then it went negative.
That's right.
Premium went to a discount, and they were all stuck, and their GBTC was worth less than it should have been. I mean, this is like tale as old as time, but it's the Bank of Japan this time.
Exactly. So, I mean, whenever you have this amount of leverage in the system, and, we know that a lot of deleveraging happened on Monday, which is why things were so violent. But there's still some leverage in the system that needs to get worked out because, if you have the balance sheet to absorb it, if you have to unwind a carry trade, you can do it in an orderly fashion as long as you've got the time. If you don't have the time, that's when things go crazy, right? So there's still, like 30% roughly, I think, of this carry trade that's still outstanding that likely is going to get unwound in the coming week or two. And if you can afford it, you're going to wait for markets to stabilize, right? And the Nikkei, it stopped down 12% and then came up 10% the very next day, which tells you like, okay, that something insane is going on and markets are not sufficiently patient. But now I think you will see the final part of this unwind probably over the course of this week. And then it's kind of back to, okay, what's the Fed going to do about this? And that's kind of the next big, the next stop on this train, basically, is to see what's going to happen with other central banks.
Did you get any like inside calls as to what was happening with Jump? I mean, a lot of people conjectured that it could be one of two things, sort of, right? Either they got a margin call, as you described, they were using that yen trade to go buy a bunch of other stuff, and then they needed to sell what they could sell on a weekend, which is always crypto. Hence why we get the dips on Sundays in crypto and a liquid market. But then I don't know what their business is. I heard another sort of story that maybe they had actually lent it and they were unwinding someone else's margin. So like, someone had lent them, they had lent out and they were clearing someone's ETH that they had used as collateral.
So I don't know. And I've heard various things just like you have. So the reality is no one knows for sure. It wouldn't surprise me, so to be clear, speculating. It would not surprise me if Jump themselves were in the carry trade because like the yen carry trade is just the cheapest source of capital in the world, right? That's why everyone was doing it, is that it's so weird to have one central bank with a pretty stable currency offering basically free money to anybody in the world. Like you'd kind of be stupid not to look at that and say, wow, I should go take that free money and do stuff with it. And Jump is very good at taking free money and doing stuff with it. That's like kind of the business model, right? Is like you take money and you use your balance sheet to do stuff. So it would not be surprising me if it were Jump themselves who were in the yen carry trade and then it moved against them. But it's also possible they were doing it as an agent on someone else's behalf, selling all that money. So we just don't know at this point. But either way, it doesn't really matter whether Jump blew up or didn't blow up, one way or another.
It blew up, yeah.
Right.
But as sort of you hinted, the BOJ got scared really fast, right? They hiked last week. Everybody got panicked. They sort of hinted they would keep doing that, but now they've gone dovish. I think they saw the pressure from around the world. So I think to your point, we're not going to be talking about the Japanese carry trade for much longer. What I do find interesting here, as is in the title, and you always give me great insight as this, is that I noticed obviously that Solana bounced the hardest and first, right? So we had sort of, that was the leading indicator even on Monday, how hard Solana bounced. huge wick down, never really lost its range. Technically, if you're looking at a chart, I mean, we could do that really quickly, right? It kind of stayed in the same range, huge bullish engulfing candle, all the things you'd want to see. But the Solana ecosystem also bounced massively. I mean, these meme coins went absolutely nuts. What do you make of that? Because you would think that there'd be sort of a flight to quality in a situation like this. You would see maybe the Bitcoins and the Ethereums. Solana now I guess counts. I mean, what do you make of this huge bounce in the memes?
I mean, what I would guess that is that people are buying the things that they think the most about and that they feel the most confident they can sort of front run the broader rebound. So my guess is that probably what you're going to see, I mean, it could be wrong. So, I'm not a trader, so take it with a grain of salt. But, sometimes what you see in these big washouts is that there's a chance for dispersion to increase. So it's kind of like the market can be more discriminating in times like this and say, actually, these things that were valued very highly, they should be valued highly. And now we have the chance to correct prices. And the things that shouldn't have been valued highly, that were kind of stuck there and nobody really wanted to kind of do the selling in order to get them down to where they need to be. Now we can kind of reset where they ought to be. So the stickiness of prices kind of goes away. That's sort of one story you could tell, which is that, everything was kind of overvalued relative to Sol and WIF and, this basket of Solana meme coins. Another story you could tell is that, the only people who are rushing back into the market are retail. And retail loves Sol and they love the meme coins. So that could be the bigger story. And then once you see macro stabilize and more of the big boys coming back into the market, they're likely to kind of pull things back up to where they were on the basis that, fundamentals haven't really changed from a week ago, right? It's like nothing here was endogenous to crypto. This is all just external macro stuff. So there's no reason why the ratio between Sol and ETH, or the ratio between ETH and Bitcoin and blah 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 should have changed in the last week. So I could see things going both ways. I think still underdetermined. We have to wait until things stabilize, and they're definitely not stable yet.
Yeah, you talked about at the beginning how everything, basically all correlations go to one in a risk-off event like this, right? People could play, right. Why does Bitcoin go down? Well, it's institutionalized, and when liquidity is sucked from the system, once again, people have to sell the things that they have to sell. It's not what they choose, especially on a weekend. But then we get this narrative every time. Bitcoin as digital gold thesis undermined by crypto sell-off, and I hate this. I hate it. First of all, Bitcoin in my mind is never traded like digital gold. It can be digital gold without trading like gold, in my mind. Like it can have the properties of a gold and superior properties to it, but that doesn't mean that it's going to trade in lockstep on every single trading day when something bad happens.
Yeah, I think the way that I understand the concept of Bitcoin being digital gold is that Bitcoin will become digital gold. It is a bet on an asset that will someday have the reach and the universality of gold, but it doesn't have that today. And obviously it doesn't have that today, right? It trades more like a risk asset. And that's to be expected, because to say that Bitcoin is digital gold says that, okay, slowly but surely it's going to usurp the place of gold in the global monetary system. But that's not going to happen overnight. And it's going to happen unevenly over time, right? So it's going to be, some early groups, whether they're institutional, whether they're retail investors or high net worths, that are treating Bitcoin like gold today. But most people who think about Bitcoin, they're thinking about it, it's going to take 15 years for it to really get the kind of reach and the kind of integration into the world economy that gold has. So really, it's more of a long-dated asset. And any kind of long-dated asset is going to be treated like, I'm not looking to make 15-year bets right now. Fuck that, and they dump Bitcoin off their balance sheet and then they go buy treasuries. So it's unsurprising to me that something that people are thinking about as digital gold, as this bet on an asset that will someday be universal, they're going to treat it for now like a bet on the future, which is obviously correct. Obviously, Bitcoin's a bet on the future. Ethereum's a bet on the future. Everything in this category is a bet on the world changing. And a bet on the world changing means, it's not going to change overnight. It's going to change over time, gradually. Bitcoin's been doing that, and its volatility has been decreasing, which is why it suffered, the lowest drawdown of most of the things that you see on page 1 of CoinMarketCap. But nevertheless, it's still not going to be anywhere near the kind of flight to safety asset that gold is in times like this. So when you see macro stability, Bitcoin actually has had periods of time where it trades very close to gold. So if you remember, there was a period of time, I think it was 21, when it was actually very correlated with gold.
Yep.
But then that correlation just absolutely disappears in times of macro instability. And I expect that that's going to continue for quite a while.
What I did find interesting and something I think about a lot and actually happened as I expected, boomers, TradFi investors in the ETF did not sell off. These things had net zero for IBIT, which is obviously BlackRock's ETF. We saw about, I think, 148, 158 million total across them, most of it GBTC, but then they bought back yesterday. So maybe a narrative people didn't expect is that the boomers buying BlackRock ETFs and putting them into their retirement accounts don't react at all and are actually more diamond-handed than passionate retail Bitcoin investors or traders. I mean, they literally did nothing. This did not sell off at all.
Yeah. Yeah. I mean, it was a record day for the exchanges. So we know that the sort of the crypto pilled, schizoids and degens, they were, panicking during this time. So as much as Twitter gives you the impression that everybody's like just sadly holding their coins, that was definitely not what was happening according to the exchange volumes. So, I agree with you. I think the ETF complex is very, very good for crypto in just bringing some stability to the holder base of these assets and to some degree some counter-cyclicality.
Yeah, but it kind of gives us this bifurcation. Like that actually did trade like gold. The ETFs and Wall Street did trade like gold, no matter what these people say, because nothing happened.
That is true. That is true. When you don't mark the books over the weekend, I guess that does kind of trade like gold.
They're telling me to stop the ETF FUD yesterday, 169 million, Monday, 149 million. Yes, specifically to BlackRock, which is arguably the one. We saw that GBTC sold off. Who holds GBTC of all the ETFs? A bunch of crypto natives. The same dudes that buy and sell or are interested in spot Bitcoin. That is the degen. So I don't think that it's a false narrative at all. Interestingly, I don't know if you saw this, but the whale wallets did buy this dip. So between 1,000 and 10,000 Bitcoin holders bought. And as we just expected, people who held less than one Bitcoin were sellers. And in stocks, you also saw hedge funds buying the dip. So it wasn't just primarily retail driven. Seems like people are not really worried that this is going to turn into the next Great Depression.
No, I mean, I think this is largely underscoring the same story, which is that any moment of panic, the smart money is sitting there trying to figure out, is this endogenous or exogenous? Because if it's exogenous and the world is going to go back to normal in a couple of weeks, then yeah, who cares? There's a great opportunity to buy. So we were buying a little bit as the market was panicking on Sunday. I wish we had more cash on hand because we were waiting for wires literally before we could try to buy more. But it was just so obvious, I think, if you understood what was causing this, that this has nothing to do with crypto, right? Like if you think of just the overall setup of the last year, right? If you rewind to a year ago, it was like we were in the wake of the banking crisis. We were talking about Operation Choke Point 2.0. SEC was coming out suing Coinbase and Binance, and we were still waiting for the SBF verdict. We just had the CZ indictment, and we're like, oh my God, when's the DOJ going to come down and destroy the biggest exchange in the world? We were in such an awful place a year ago. And then you fast forward to today, and it's like, okay, Trump is now declaring himself the presumptive crypto president. He's going to do a strategic Bitcoin reserve. We've got interest rates coming down at a really rapid clip. We've got this massive ETF complex sponsored by BlackRock and Fidelity, two of the most successful ETFs in history. And add to all of that, you've got PayPal and Stripe and the complete reversal of U.S. policy towards crypto. It sort of could not be better if you imagine what we were waiting for a year ago. And we're still quite far off from all-time highs. And the question you're asking is like, oh, is it all going to zero? It's like, no, of course it's not all going to zero, right? Things are great. Things are objectively in a really awesome place for the industry relative to what you could have possibly expected in 6 months ago to a year ago. So I think any panic because the Bank of Japan is raising interest rates, I'm like, dude, you don't have a sense of perspective if you're worried about that.
Yeah. So every dip is a dip to buy right now if you believe that this is exogenous, as you said, unless you literally believe like the global economy is going to melt down tomorrow, then I should see trying to get to that.
And look, even in the case, a U.S. recession, right? Like obviously, U.S. recession is going to impact demand because, as we see from these Bitcoin ETF flows, these flows are pretty big, and it's driven mostly by U.S. retail. If U.S. retail doesn't have money, then that's going to make it harder for the marginal buyer of Bitcoin to come in and buy some of these dips. So I think that does matter. But even still, most economists are forecasting the likelihood of recession as less than 50%. So
yeah, and shallow and short if it does
Exactly.
happen from economists. So I'm going to ask you, as far as the 4-year cycle goes, then, and what we usually see in this part of it, this was all expected in my mind, right? In March, I said we got meme coin madness, we got the halving, 6 months of boring chop. Get ready. Still seems terrible when it's happening. But do you still believe that with all of these tailwinds that we start to ramp up in the coming months? Another repeated fall up, finally altcoins catch a bid. 2025 is amazing into the summer. Repeat, rinse, repeat, rinse, repeat.
yeah, look, I'm a venture capitalist, not a trader for a reason because I suck at trading. So
But that means that you're deploying capital with anticipation of gains.
True. So, and I'll caveat as strong as I possibly can. Not investment advice. I have no idea which way markets are moving in the short term. I'd say in the medium term, it seems pretty clear to me that Fed dropping interest rates is going to be good for risky assets, and the riskier you are, the more you're going to benefit from the marginal decline in interest rates. This whole situation has likely increased the Fed's timeline, or I should say decreased the Fed's timeline for getting interest rates back down to the neutral rate. And they're feeling the pressure, and we're going into an election year, and this Fed probably is going to be feeling at least some degree of pressure that, hey, we want the stock market to be doing well going into the election. So I anticipate that is going to be net good for alts, just because of the fact that alts are risky. So alongside anything else that's risky, you expect it to do well when rates come down. That being said, every bull market in crypto has multiple pit stops where we take a breather, we kind of reset some of the leverage, and everybody at that moment panics and says, "Oh my God, is it over? Is it over?" It's not over until people run out of things to talk about, and people are still talking. So I don't see this market ending soon, but what do I know?
Yeah, well, we saw this flight to Solana. We saw a flight to memes. The thing we're yet to see a flight to at any point in this cycle, which I think is normal if you take Bitcoin ETF buying out. This is where we should be in the cycle. But altcoins from a few years ago have not caught a bid. I mean, you're looking at 52-week lows on a lot of the most hyped projects of past cycles, L1s, L2s. I think people are left asking, do we get those alt seasons where everything rises? Where's this new money going to come from when we have thousands of coins launching that are on hold until the fall and supply just hitting the market and new unlocks? We're going to need some serious retail FOMO, in my opinion, to kind of have one of those everything catch a bid situations.
Yeah, I agree with you. And every period of time when Bitcoin's consolidating and it feels like there is very little of a waterfall of flows coming down to the alts, people always wonder, where is it going to come from? How I cannot possibly imagine people wanting to buy any of these stupid coins ever again. And that Bitcoin does that for 6 months, and then all of a sudden, boom, party's on, everything's just going up, and everyone's like, wow, Bitcoin's up 5%, everything else is up 15. Fuck it, I'm getting out of Bitcoin. Like I got to join the party. So that's always how it looks. I mean, it's never a question of like, well, now the flows of fees accruing is going to the alt L1s, and that's why everything is moving. It's just the market is very animalistic, and when it sees that the game has changed, everybody gets up and dances to the new music.
And it takes like one day. It's like all of a sudden you catch this one bid, and then it's like the 6 months of depression is gone and everybody's fully euphoric and FOMO and things go flying. I mean, we got like a few minutes left. What are you most excited about then that's coming in the next few months? We obviously have talked about the tailwinds for the industry in general, but there's so many narratives bubbling. Do you think any of them are going to really stand out, in the next 6 to 12 months?
I mean, one of the things that I think this cycle has taught us more than anything is, Solana has been the star performer of this whole cycle. And a lot of that story has been in the past, people used to make fun of the idea that, oh, do we really need high performance chains? Who is this for? Who cares whether we have high performance chains? And a lot of the EVM based chains that were trying to get retail adoption were kind of like, well, but we're just competing with Ethereum. And Solana has now told the story very, very clearly and very persuasively that no, actually, users really do care about performance, about latency, about UX, and you need to step up your game if you want to be able to get real mass adoption. And I think what this is catalyzing is the new generation of blockchains that are going to come live in the next 6 to 12 months. They are all answers not to Ethereum but to Solana. So I'm very excited about. I know this is very passe at this point to talk about new token launches or new blockchains, but I'm very excited about Monad and about Mega ETH, which are two of these new EVM compatible blockchains that are conceived as different ways, one on an L1 and the other one on L2, to be super high performance in response to how can we create a Solana-like UX with Ethereum-like affordances and part of the Ethereum ecosystem, right? So you can use MetaMask, but it feels like Solana. And that now is the bar. If you cannot create a Solana-like experience, then it's kind of game over for you. Like there's just not enough room in the market for anything besides, it's basically like Ethereum on one side, which is like, okay, this is this max decentralization, max kind of purity. And then it's Solana and there's gonna be very little in between. And so unless you can really differentiate in some use case or some storyline, like, something like, Near is going after AI. Okay, maybe that's something orthogonal. But if you're just saying, look, I want to be a consumer chain or a DeFi chain, you need to have an answer to Solana. And right now, most chains do not really have that, which is why Solana is excelling to the degree that they are. And I think it's great for the EVM ecosystem because it raises the bar. Because it tells you, look, you have to be this tall to ride. Otherwise, no, why would anybody use your chain?
That definitely scares me for the question I asked before about old coins catching a bid. Like if Solana becomes the bar that needs to be achieved, we have a whole lot of layer ones that have not caught up and a whole lot of layer twos that have not really attracted any TVL. Why would those coins go up besides retail trading if they're not needed? We just have way too much stuff.
Yeah, I think it depends a lot on the ecosystem. And I think what you're going to need to see more and more is more differentiation. And on some level in the last cycle, you kind of didn't have to differentiate to be valued as a serious contender to maybe become, the base or the arbiter, right? We sort of didn't know who was going to become that. And it's kind of correct in a market where, we're not there yet and we don't really see all the TVL and all the action happening on chain to say, well, anybody has a shot, right? It's a horse race. Well, it's less of a horse race now. We kind of know where things are shaking out, where the capital has flown, where the users have flown. And it's tougher now for, the seventh L2 to make a real claim. They're like, well, no, I have a shot of becoming base. It's like, you kind of don't at this point. So I think what we're going to have to see going into this next cycle is that people really find a niche. And if you don't find a niche, if you don't find something that you do better than other people, that's going to be a big, big, big challenge for you to kind of reclaim that bid that you had in the previous market.
Yeah, so what I hear is that we will have still massive movement in the altcoin market, but you're going to have to choose wisely.
Exactly.
It won't be everything. A gaming chain, a DeFi chain, an NFT chain. If you can differentiate, make it clean and specialized, then you have a fighting chance.
That's right. Yeah. And I think we're going to see, so much of the contest over the last 12 months has been basically people trying to all copy each other. People all trying, say, Avalanche does Avalanche Rush. I'm going to do Avalanche Rush. So this person does this. I'm going to do that. And I think what we're going to see more, and Blast, everybody started copying Blast over the last 6 months, right? And I think what you're going to see more is people realizing I've got to do something really different from everybody around me and actually start diverging in my code base, in my opcodes, in my, the kind of projects that I'm subsidizing and attracting to my chain. That's going to be the way that these things fundamentally win, is that they look less similar to each other, not more.
Love it. Well, thank you for getting up early, even East Coast for us. I know you've got a crazy busy schedule. Always love to have you on. You going to Singapore by any chance?
I will, yeah, for token. I'm looking
All right,
forward
we'd
to
have
it.
to do one in person. Can we do another one in person? We did it last time.
Always, man.
All right, man.
Would love to.
I'll see you in Singapore. Guys, you should absolutely be following Haseeb, really the greatest greatest insight that we get from anyone in the industry, in my very humble opinion. And his X account is right down in the description. So go follow, man. Have a good time at the conference today. We'll see you soon.
Great to see you. Take care.
Thanks, man. All right, man. What a great guest. So smart. Makes me bullish every single time. It's really important, I think, to remember to zoom out and not get caught up in the nuance of the daily trade and what happened. Nothing has changed for me. I'm going to talk to Chris about this in a minute, but every guest we have on, maybe it's scary that everybody sort of agrees, but everyone's like, yeah, whatever, man. Cycle's the cycle. It's going to be fine. Nothing has changed. It's just a retrace. We see them in every bull market. Stop panicking. I mean, is that kind of how you're thinking about it? I see you nodding back there.
Yeah. I mean, my sense of it this weekend as it kind of went through appeared to be more of the, it didn't seem to be like a big, like if something was really happening. It seemed to be more like an overreaction. And so I think we kind of saw that, again, I keep pointing to, I've been on a lot of shows already this week, but I keep talking about the same thing, which is if this was as big a deal as everybody was trying to make it be, we should have seen when New York opened on Monday, we should have seen Legacy immediately just selling, right? We should have seen that because they couldn't do anything on the weekend, right? You can't do anything. You gotta work with your books there on Monday when it opens, and we didn't. Instead, we got this big reversal coming off. And so, when you look at that, you go, okay, well, things aren't quite what everybody was freaking out about. And this chart here that you're pulling up, this is a really interesting chart. I didn't do this myself. Actually, one of my followers, I can't remember his ad at the moment here.
I love when you get good ideas from other people. That's my favorite thing.
Yeah. I mean, there's only so many things we can look at all the time, right? And sometimes our creativity isn't there. But this is Bitcoin versus the VIX, right? And what it's shown is every time we've had these spikes in the VIX here with with the VIX, Bitcoin has reacted along kind of this same support level. So does it mean anything? Maybe not, but it does seem to say that look, we're kind of catching that bid right there again at that kind of support line coming up there. It's been there for the last almost 10 years now. So it's just another one of those things when you kind of look at it and go, okay, well, what are things doing? How many different ways can we possibly look at this, and kind of get the same answer? So, big VIX move, with all this when it happened. And, we're not seeing any follow through yet. And, here it is Wednesday now. Doesn't mean we can't have it. It doesn't mean we can't have it. But, again, when we're trading in there, we trade along with what is most probable at that time. And then you use proper risk management to protect yourself in case you're wrong. I mean, it really is as simple as that. I always say trading is simple. It's not easy. It's not easy because our emotions suck. And so they make life tough. But yeah, that's I love that chart right there. Pulled it up. It's great. But Bitcoin itself. So I've had this alternate account, which I've talked about a few times over the last few months, in case we got a real kind of breakdown that maybe this is more of a 4 off the swing low here, off the bear market low. So we get a 1 and 2, and then we get a 3 and a 4 here. If we measure this out, it actually comes out where it should, about 1.618 right there. So you see, we kind of get that one. That's usually we'll look for that first, wave 3 target. So right now I'm kind of looking at this as a 4 pullback. By the way, it pulls back 38.2, exactly where we would look for it to do as a fourth wave. We've got an ABC and then an ABC again, gives us this WXY here correction. So, I mean, again, we're looking at everything. We can look at the fact that we finally got this big push down. There's no, if you look here, there's no actual expansion of volume as we came down. So what do we look for? When we're looking for, is this a distribution? What we're looking for is we're looking for the market to join in on the drop down. So we should see volume expansion, as we get down there, as you break down. Instead, all we got, you see volume here is just pretty much level here, the same way it's been through this entire run over here. All we got was this huge spike of volume on that one candle that broke down. And then it didn't go anywhere, right? There was no follow through. Instead, we rallied back up. And a day later, we'd recovered almost everything that we lost that first day. We did close above this swing low here. So we've got this potential bullish SFP printing right here. or again, potential spring in this range. What I'm looking for with this is I'm looking for a daily close above that drop, above that big candle there. Because if we can get a daily close above this without actually breaking down, what that tells us is
that's like
supply
58,200-ish, right? Just for people.
Oh, the top
watching.
here on this chart, it's about 58,300, 58,200, depending on what chart you're looking at. But it's that day, it's the swing high on that day. And what it tells us is because of this large spike of volume, again, it was this attempt to push price down and to get it going and continue, but it was met with demand that shot it right back up. So if we overcome this day here, what it says, it basically nullifies what happened here. It basically says this does not hold the effect it does, when we first did it. So if you're concerned about it going down further, getting a daily close above this should take alleviate a lot of that concern. Again, nothing's guaranteed in trading, but these are one of the things we look for as we do it. So I like it, again, reset and oversold with RSI, Stoke RSI oversold. Again, 38.2 pullback, what we would expect for a fourth wave. No follow through lower, large wick, bullish SFP, spring here. I mean, it's so much going on there. But as I've been talking about since we made this swing high up here, this is still bearish market structure. This is a high, a low, a lower high, lower low.
Yep.
Yeah. So, we were talking about, even though we were looking at potentially getting this move up and what it would look like, we still, as I kept saying, had to get above this point, and we never did. Now it is this point here. It is this 70,000. So if we can get above that, that'll break this bearish market structure here. If you're just looking at market structure, and should then look for higher. Based off the low here, we've got a target of around 95,000. Just simple, quick target based off the height of this pullback. So, if we're getting the breakout above this wave X here, which again is about 70, almost 72,000, that should have us target at least at 95 based on that height there.
Yeah. I mean, this is what I drew this morning just as an idea that I'm always looking for, right? This is the daily. It hit oversold RSI. If we get another dip, unless it's way down into the 40s, it is very likely we'll get bullish divergence. So any close on the daily basically below 54,000 here, and it wouldn't be a surprise, I don't think, to anyone to retest not the lows of the whole candle, which was below 50, right? That's the wick, but the lower close, man, it would be hard for me not to want to plow into this very, very aggressively if we get that.
Oh yeah, no, and I agree.
I'm kind of watching wait at 57. I didn't get 50, right?
Yeah.
So at 57, I'm kind of watching wait, but one more dip with stronger RSI, and I'm very, very confident we're ready to fly at least back to those kind of 70.
Yeah, and I agree with you on the divergence like that. Often, if we're going to get that, that's what we'll get. We'll get that bullish divergence down there. The other thing we look for is the volume on this, what appears to be a spring here, is so much more significant than what we had on our initial drop here, as you can see right down here. So what that really requires most often is a retest. Now, again, that doesn't mean it has to come to the swing low here, but it just means a higher low on lesser volume. So those of you that are watching, this is all you have to do. If we get a pullback here on the daily, you're watching it to make a higher low on a lot less volume than what we had here. If you can do that, that's a successful test. You better be in, because the odds are significant, that it's going to break out there higher. I want
to ask you a question though, because obviously you taught me a lot of this, right? You addressed it. So it's Wednesday. This would have been a better question for Monday, because we've seen you kind of got the big move, the huge volume. I mean, that was the biggest volume candle we've now seen in years on a daily. So usually when you get a range breakdown, you obviously kind of have it drawn more like a channel, so it's descending. But if you're looking at it as a horizontal range, if you get huge volume on the breakdown of a key support, usually that indicates there's more to come, right? That the bottom isn't necessarily in. I know that it's in context of what happens afterwards, but like, let's say you drew it as a horizontal range, which, I think the lows are honestly here, but let's get generous and put it here. We are back in the range, but if this gets rejected here and it was huge volume breaking that support, maybe that's just filling the wick that you're talking about. Doesn't mean lower lows are coming. It just means you're going to go back down and test.
Yeah, exactly. You can think of wicks on candles, if they're below the candle, as demand that's waiting. If they're above candles, you can think of as supply that's waiting. So that's why often, you can see there at the prior where I have the A, that July 5th, again, we rallied there and we pulled back into this wick. There's waiting demand sitting here, pulled back into again, caught it back up. The biggest thing for people to really pay attention to, it's not just that it broke down, but it's okay, where does the candle close? Had this candle closed much closer to the low, it would be much more likely that we would have seen follow through coming up the next day or two or whatever. The higher that closes back up there, the longer that demand wick, it shows the more demand that was sitting there.
And it also indicates that other people bought after they saw the reaction of that demand. Because the original bottom, you push through that demand, those are sitting bids. But then the follow through that makes the wick longer is people actively jumping in as well.
Yeah. So we can look at that again. You see that long demand wick. It signals the strength of demand in that area versus the supply. And then again, the fact that we closed above that swing low was the other big thing because, again, that gives you that bullish SFP swing failure pattern there. Potentially setting up. So again, with the big volume on here, generally it doesn't have to, at least not right now. I mean, it could actually rally up here and pull back and then go. But generally, the first thing I'll look for is a bit of a rejection here and a pull back into that wick. But again, it doesn't have to. It could rally potentially all the way up here toward this pivot and then pull back maybe to the S1 and then go. So, but at some point you're going to get a pullback, and on that pullback, you're looking for a higher low with a lot less volume than what we had right here to give that. So
what else are you looking at now that we sort of have this nice bounce? We're kind of chilling here. I think people are watching and waiting, but what is it? I can't stop looking at this Solana chart. I brought it up again.
Oh man, it's been a monster of a move back up. I think we're up something like 40 somewhat percent.
But it also never lost the range there, as you can see. I mean, that was a sweep of the range lows. This is as bullish as it gets if you're just looking at the chart in a vacuum.
Everything else I said there, big candle, large lower wick, huge volume, swept the low. So again, bullish SFP, or in terms of the range, it would be a spring. Basically hit the EQ of what was left over the weekly demand structure here, which works perfectly. S1 pivot, we closed back on that. So basically S1 pivot has held this support. So we've got a pin bar on support here. The next day we closed above. So when I was talking about Bitcoin, where we want to see that daily close above that big candle swing high, we got that the next day there. It's continuing to rally up. I mean, how you could not be bullish on Solana, I don't know. But based on the height here, we've got a generic target right there around $315. So, I think, the same people that have been crying about Solana in this range are the same people who, didn't believe this was happening down here and cried about it here. And, oh, the VCs and, they're dumping on you and all this nonsense. People get caught up in all these stupid narratives that nobody, well, especially them, rarely understand really. And I say this because hopefully it'll really connect with people and they'll go, oh my God, I got to stop that and just start reading the chart, because look at how much money you missed. If you bought down here around $9 on the 30th of December of 2022, I mean, man, you've been up 212. Right now you're up to 152. That's huge. It's huge. All you have to do is buy and hold on that. But yeah, Solana just been absolutely monster move right back up. Love watching it. Look at that volume on Solana as well.
Wild. Absolutely
insane amount of volume there. So yeah, Solana, another one. Coin. I'm again,
looking really quickly. I happen to be looking. That is the biggest volume candle, even bigger than the bottom at $12.
So this over here.
Maybe I'm trying to find it. So the only time it was
right
bigger,
here.
I'm trying to look here. I can just look up. Yeah,
right there around November 11th and 10th of 22, right around there.
I mean, that is wild, and that's when it went from. I mean, that's FTX. Yeah. This was as much volume, basically. Slightly less. So FTX was more, but the most volume since FTX, including when it went to $8.
Absolutely significant, right? I mean, it's nothing little. When you get that kind of that move, and especially in here, it wasn't really that far a move overall. Below this swing low here, it was a very little move.
I hate to be talking this to death, but just in context of Bitcoin, for people who are watching, like, you look at the Solana chart, A, it had a longer wick, but B, yesterday you already had bullish engulfing that he's talking about what you're looking for on Bitcoin. You want to see a close on Bitcoin higher than that candle. We already had that a day later on Solana.
Yeah.
If you zoom in, I can show you because I just have it zoomed. Compare this to the Bitcoin candle. We're trying to see Bitcoin get above this level if it was Bitcoin. that already happened and is way outperformed already to the upside, testing the 50, 200 MAs back to the range EQ. That's a crazy move. I don't care what you emotionally think about it. If you're trading, you have to be paying attention to that.
Oh yeah. It's, again, and what you're looking for when you get pullbacks across the market is, especially when you have the altcoins and whatnot, is you're looking for who responds, who really responds, right? Those are your leaders. Those are the ones you should, that you generally want to be in. You don't want to, be too excited about the laggards. Look for who really catches that bid first and hardest when you get that pullback, because often they are going to be the ones that are going to continue to lead higher. So, in this case, I think Sol is a great candidate, continues to be a great trade overall with that. Coin, just to show a bigger pullback here. This here, I've got it as 4 of this 3 heading up here. Let me see if I can get this out of the way there. But it could potentially be, this could be 3 here. Either way, we should be heading up toward 400. We've got kind of the same structure here that we have on Bitcoin. I've got it as ABC, but probably WXY as well. Yeah, you see ABC right here. But again, opened up Monday. And like I said, if things were really end of the world recession coming in, everybody thought that, it should continue down lower. And instead, what happened was the minute the market opened, it ran back up, almost filled in the gap completely coming in. And so, here, that's been a great rally up there, 38.2 retracement. Again, kind of like Bitcoin. It's what we would expect. First target for a wave 4, initial target usually. Again, we're back up, again, trying to fill in this gap right here. If we can, from here, we could see a pullback into this. If we were to break down further, we'd look at the 50% retracement, which is about 140.5. That's our secondary target for wave 4s. But as long as we can continue the rally here, impulsive breakout and close above this daily pivot at around 235 should signal the bottom's in and we're headed up. Breaking out above wave B here at 272.5 is going to add confidence to the account. At that point, there's little reason to believe it's absolutely not going up here to $400. So those are kind of the levels I'm watching to add more confirmation to this being done here. But again, if it does break down further, 50% retracement is where we'd look for the target on that.
I buy the hell out of that.
And of course, we have to talk about not Monster. I always want to say Monster. MicroStrategy.
Monster Energy Drink, aka MicroStrategy.
Oh man, MicroStrategy. They're doing a 10-for-1 stock split today after the market closes. And so looking here, again, the idea that we're doing, a wave 4. We've pulled back 38.2 already. I can zoom in this a little bit here. 38.2 here as it is. I don't like the count. I can maybe finagle 5 waves up here and say, okay, this is 3, this is 4, and then this is 1, 2 of 5. We'll see how it plays out here, but it's close enough to potentially just be a flat here as well for the 4. So based on the height here, we've got a target of about 3,052 to come up there. That would be my initial target based on the height here. Once again, impulsive breakout and close above the daily pivot here at $1,555 should indicate that the pullback's complete. Further breakout here above 1837. Doesn't have to close, just break out above 1837. Should add confidence to the count again and says that we're on our way up here toward 3,052. So what you're noticing, if you're looking at Bitcoin, if you're looking at MicroStrategy, if you're looking at Coin, things, they're all kind of got that same count, right? They've all still got that kind of like that 4th wave moving up to the 5th wave next. So I like a lot of what that's showing there. Let me see here. I got a couple more charts here real quick. Let me pull this up here. I've got C-Pool. And we've got what appears to be a throw under of the channel support. Let me just zoom in here a bit. There we go. Throw under of the channel support here. Basically a bullish SFP below this January 31st swing low. Pin bar candle here. Just want to see some follow through. We've got a large fair value gap here, smaller one right there. But if we can impulsively break out and close above this channel EQ here, so probably somewhere right around 11 cents or so, 11 to 12 cents. Like I said, impulsive closeout, breakout above it and close should give us a target of that channel resistance up there, probably around 17 cents. Impulsive breakout and close about that gives us an initial target of 26 cents prior to that swing high there. And then we've got, and once we get that, next target up would be $1.24. So that's kind of how I'm watching this one play out. Just want to see that follow through. I do like here with the volume. I like that we have this spike of volume with this big candle, larger volume, but just a long demand wick and closed higher than where it opened. So more effort, absolutely zero result for supply here in that secondary candle. And usually that indicates a reversal. So I'm liking what I'm seeing so far off that as well. Whiff. You guys like dog whiff hat?
Names bounce the hardest, man. It was crazy.
Man, I'll tell you.
Solana bounces, so anything on Solana, the degens grabbed it.
Yeah, so we dropped into this demand structure over here, hit the EQ of that, bounced back out. The first day back up, I got to zoom this in a little bit. First day back up, almost took out the swing high here. Today, clearly doing it, looking well, bouncing out of oversold on RSI. Stoke RSI is just now starting to push out of oversold. I love what I'm seeing there. Overall count's a little odd here, but it looks like maybe a 1 with a large flat here. So three waves down for A, 3 waves up for B, and then ending diagonal here. So ABC 1, 2, ABC 3, 4, ABC 5. So again, based on that would give us a minimum expected wave 3 target up here about $8.18. What are we looking for along the way? As always, impulsive breakout and close above that daily pivot should signal we're done here. According to the count, to add confidence, we'd need a breakout above wave B, which is $4.86. But, this is a wedge coming down here. So if you're breaking out that wedge, you, in terms of, probabilities, you should be long, at least at that point. Like I said, probably even here at the pivot. So a lot of room to make still pretty good money on the next move up. And this is only wave 3. So we get a 3, we can pull back for a 4, and then we get a wave 5 up based on what I'm seeing here at the moment. So not looking too bad there. But, man, that is a big pullback there off this swing high up here on March 31st. Don't know if anybody's really still holding that, but if they are.
I think people are still trading it.
Jasmine here. Jasmine is another one people were talking about for a while. Again, same idea. Descending channel, throw under. We should expect a sharp move up, which we're getting. Again, today we're breaking out already above that big candle's swing high there. You can see that we just, where we hit here with our wick is the same where everybody else was hitting with wicks all the way through here. So this continues to hold. This February area here continues to be demand central. It's continuing to push price up there. Looking for a nice impulsive breakout and close above that channel EQ. Gives you a target of the channel. Doing the same breakout through there. Get you a target up here of at least 4 cents or so. And then based on the height of this pullback here, we've got an easy target of about 8.2, 8.3 cents up here. So it's starting off pretty well, looking pretty decent. Just need to get that follow through and continuation there. And let me see here real quick. Sui. Always makes me feel like I'm calling the pig Sui. Anyway.
Squeal like a pig, boy. And then our generation knows the movie Deliverance. Probably
Yeah.
other people don't.
Exactly where I was going with that.
Yeah. All right.
So we got this, looks like potentially a wedge going on here. Again, throw under. We've got a pin bar candle there. Love that it closed back above the daily S1 pivot. That's the kind of stuff you want to see. Right here, we've got bullish divergence right here between these lows. And so I think you need to be long here already. But again, looking for an impulsive breakout and close above the daily pivot, which should also do it above the leading resistance. Should indicate that the low is in. We got initial target of $1.41.5 and then $1.7165 or so to get us back to the top of this wedge here. So it's a pretty good setup, I think, right there. Kind of just brings us back up here to the top. And if we can break out of there, things really look good. But for right now, I'm just focusing on these closer targets right here as far as SUI goes. So that's where I'm at, man. I think that's all the charts I got there. Yeah.
I like it. That was a lot. It's good. Mm-hmm. Everybody here just wants to know if you hear banjos, run.
That's right.
Whew, man. All right. Well, everybody follow TX West Capital, of course. Chris, thank you as always for your insight, and we'll see you next week, man.
Sounds good, man. Take care.
I want to show you guys something funny after Chris goes, because I didn't expect this, and I'm very impressed with AI because I don't know how they nailed my voice. You guys may have seen this Tucker Carlson shit that Rand Nooner has been behind. I just actually found this hilarious. It's like they make fun of me, Lark, Bankless, Wendio, Guy from Coin Bureau, George. We are all George. I think his name is Hillary. I don't know if you guys saw this video, but like, I just don't know. AI is so good at voices. I just had to share this. Really funny.
So, why do you want this job? And exactly how do you believe you'll contribute to upholding and driving the legacy of this iconic brand?
Well, for me, McDonald's isn't just a fast food chain. It's an emblem of global enterprise.
I call it a towering beacon of American capitalism, which is why I envision myself not just as an employee,
but a custodian of its remarkable legacy. You know, this wouldn't be simply a job for me.
This would be the opportunity of a lifetime for us.
Right.
A chance to join one of the greatest companies of all time.
To pioneer industry-leading initiatives that set new standards for innovation and cultural influence.
By bringing value to the McDonald's family and helping propel the Golden Arches to new heights.
You are aware that this is an entry-level kitchen crew position we're trying to fill?
I just don't want the public seeing my fucking face, okay?
Well, you've got to start somewhere, right?
Absolutely. Now, looking ahead, where do you see your journey with McDonald's leading you?
I like to think that I'd ascend to a position of strategic leadership relatively quickly.
maybe regional manager, that'd be cool. Or assistant manager.
Marketing, or maybe digital advertising.
Logistics, provenance, supply chain stuff, maybe HR.
But I think true growth is something internal, right?
We're big on sustainable practices.
I used to be a DJ, actually, so maybe vibes manager.
And what would you say is your biggest weakness?
Some people say I'm a bit too driven.
I can be stubborn. My friends actually call me Diamond Balls.
I'm a perfectionist. If I'm flipping a burger, I want it to be the best.
Weaknesses are for pussies and Cardano holders.
I think we're both too empathetic.
We cry very easily.
And lastly, tell me something surprising about yourself.
My name isn't really George.
Believe it or not, I used to be a DJ.
I once got over 2 million views on a video I made.
It's Hillary.
Well, thank you so much for your interest in joining the McDonald's family. We'll be in touch soon.
Please, sir, I'm begging you. I really, really, really need this job.
I mean, I guess I'm just going to have to call myself vibes manager from now on. I love it. Love it. I actually thought that was really funny. It caught me by surprise. So good. All right, guys, that's all I got for you. I got to run, go do spaces in 15 minutes. I will be back, of course, tomorrow. Now I'm going to check my calendar, see who we got tomorrow. Don't know yet who the guest is. And then, of course, the Friday 5 on Friday. But, man, that made me laugh. All right, guys. See you soon. Bye.
That's dope.